Good evening, everyone, and welcome to this session of the action plan. I have Mahesh again with me today, and he is going to teach us how to make money when we sleep. Good evening, Mahesh. Great to have you back after quite a while. How has your courses been going, and how has things been with you since the new year?
Yeah. Good evening, Grenville, and thank you so much for inviting again. It is really refreshment because coming back to your Facebook Live is really motivating for me. 2021 is a really a good year to start with, and hope I think you must have also had an awesome year to start.
True, true. I mean, 2021 is definitely turning out to be much better than 2020. Things are looking up. The economy is doing well. At least the economy is turning over, I would say, not doing well. So, all my customers who I speak to, I've got good things to say about the future. So, looking forward to it. I'm really looking forward to it. So everybody has a dream, right? That they should just sit quiet, do nothing, and money should multiply. So, is there some magic way to do this?
Very good question and very tricky question as well. See, everybody, like you said, everybody has a dream, but the one who actually works on that dream and have that not a desire but have a burning desire to achieve that dream and make it to that level where they have achieved it, that person only can say that they can make the money while sleeping. Rest people can only dream, and while sleeping they can make the money, they can make lot of dreams, but they never get succeeded. So it's really very important that these things we need to understand. And there is not like a magic wand like we have Harry Potter kind of thing. It's all sheer hard work, discipline, consistency, and a lot of I would say hard work. We have to sacrifice a lot. It's not that success doesn't come as in a quick of this thing. It will come overnight. We never know, but we have to work towards it. So that's the this thing.
No, I agree. I mean, as you said, even whether it's personal finance or business, I think nothing comes easy. They say there is no free meal, right? So I was actually
Right.
trying to trick you into giving me some crazy scheme that we could pull your leg, but I understand that nothing can be done the easy way. I think sheer hard work and focus is what gets us to our goals, whether it is doing business or whether we do personal life. So I think I knew this is what you were going to say, but I was just trying my luck to see if you had some magic thing inside your sleeve and I can make $1 million and retire tomorrow from my work. So jokes aside.
If that would have been case, Grenville, then everyone on this planet would have been a wealthy person.
No, true, 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 true. No, I agree. See, no, that's what I thought. Let's put things in perspective. Okay, so the topic was a reality check to people on how they can make their money really perform for them, and what they need to take genuine and realistic steps in their lives to make sure that this actually gets converted into reality. Right. So let us give pointers to the viewers of this video as well as the live and what could be the probable steps they could take so that their investment gives them returns, right? And reasonable returns and with a minimal risk. That is what we should look at when it comes to whether it's personal finance or when it comes to investing in business as well. Correct? So, from the personal finance side, what is your thoughts?
So from personal finance side, like we said, if we want to work money while sleeping, like I always say that money will work 24/7. Even though you sleep, you should ensure that money should never stop generating you more revenue. So from the personal finance perspective, we can say that we need to invest, we need to find some kind of investment vehicle which will be giving you returns with minimum risk, like you said, and the returns which you want, and also it should be in line with your financial goals. So what is your financial goals? If you want to buy a house, if you want to buy a car, if you want to go a dream vacation, if you want to do what you're passionate about, so this all the things are the financial goals. Then you need to select your the exact investment vehicle, and you have to travel on that vehicle and get to that goal. Now the path may be different sometimes, in like doing pandemic kind of things, or sometimes Sensex going 50,000, or a stock market going way above, sometimes goes for a crash. We never know what will happen. At that time, you should change your path, but the goal should be the same. What is your goal? If you want to buy a house, you should be stay focused on to that, and you should change your path. Then again come to that another get another investment vehicle and just go there. Like we go to a bus stand, we get a bus, then we go to one stop, then again we get to another bus, we get to that way we need to do. But if a bus is not there in that particular stop between two stops, what we do? We take some rickshaw, or we take some private vehicle, Uber or Ola. Same way, that way you have to do with respect to personal finance as well.
Okay, so let's take a few of the instruments that you use in personal finance as you suggested. Okay, and let's start from the safest bet and go in increments of risk, right? That I think will be the right way to go about and do it. Agree?
Yeah, right.
So, on
So
the most
yeah,
safe investment, what do you think would be the right thing to do?
so earning money is important, no doubt. Everyone knows about that. But what you do with the hard-earned money is equally very important. Because here, what is happening, we know how to save, we know how to spend, but we never know how to manage, and that's very important when we want if our money should work while we sleep. So, very first is that we can say simple and basic is savings account. So, this is a very simplest financial instrument we can talk about. Now, although it provides a modest interest rate like 4.5 or 4%, but it cannot offset the erosion in value caused by inflation. Always remember that, because this is actually an inflation-proof, we can say, financial instrument. It is still popular because it provides a principal security. It is also an highly liquid instrument. Also, ATMs are there where you can ensure that money deposit in a savings account can be accessed anytime, anytime. So this is a very simple and basic savings financial instrument. You can use it.
Great. So
Now the
I
second, if
agree.
we
Yeah, sorry, please keep going.
yeah. No, tell me.
No, I totally agree. I mean, whether it comes to a cash flow issue or whether it comes to personal finance, I think this is, of course, the obvious choice, right? You need to be liquid,
Right.
and you need, as you say, in the case of business, we go in for overdrafts and we go in for ask people to invest in us, okay, and use that money to keep our cash flow going. So it pretty much works the same in business too. So we would rather have people invest money in us and use that for our cash flow issue. So I was just relating that to what you were saying. Yeah, please. What else?
Right. Another thing is that we can say credit card. Lot many people are saying that it's bit debt trap, rabbit hole trap. I totally agree with that. But if you use it a particularly in a specific way, it will give you lot of returns and lot of value added services. Because one thing is that it allows the user to purchase on credit, and the purchases are consolidated into single statement at month end. Now, what it facilitates your accurate record keeping. It allows your remote purchasing, that you can shop online if you want buy goods on online, Amazon.com or Flipkart, or by telephone. You can do everything. It's very a cheap form of short-term borrowing. If you can pay the interest, because interest is very high. But although if you can take from a larger perspective, it's a very good source of short-term borrowing also. However, it also has a disadvantages. Like I said, overspending. So you may not have a hold on you. You will buy the goods and services which is not needed at all from the perspective, but still you will buy because you have got a credit card. Using multiple credit cards, that is also a second disadvantage we have. So although the amount borrowed with a single credit card may not be much, but if you have multiple credit cards, you can say multiply by 5 credit cards. So you have multiplied by 5. So each having same outstanding amount will be resulting in substantial in debt. It's very high. So remote use of credit cards is also very risky, as like doing now the hackers are very active, because digital as age, I mean, not many people on digital are there. Lot many fake Facebook profiles have been made. So card details can be intercepted by the hackers as well. So these are the disadvantages as well as the advantages of the credit card. There's another financial instrument.
So actually, when you talk about credit card, I have a story here. Now, all through my life, I have used credit card honestly very effectively. It's not about blowing my trumpet, but more about trying to tell you how you can use credit card to your advantage, right? Now, as you said, credit
Right.
card is a credit instrument, right? So it comes with a 30-day or a 45-day credit period, depending on when you actually do the purchases that you have. Now, I use credit card just for convenience. Okay, the way I kept using my credit card was I ensured that I never crossed the money I had in my bank. So if I wanted anytime I could go pay my full credit card bill, cancel my credit card. That was the way I did it. I just, instead of using it as a debit card, I pretty much use it as a credit card just to get the, they used to give royalty points. There were accesses to lounges. There were other benefits you get from the card. Okay, discounts
Right.
and other stuff, which you would not have enjoyed if you did not have a credit card. So I enjoyed all those benefits. Like one credit card I had in Bahrain was where they had a free service to the airport. Okay, twice a year you can get a chauffeur-driven car to the airport free of cost, and there were access to the
Mhm.
lounges free of cost. Okay, so there, what I would have had to pay money for, I got it just by taking, and it was a free card. It was not a paid card. Okay, just by virtue of the limit
Right.
of my salary, I was able to be entitled for that card. So you can use the card in a very constructive way and a very good way also,
Right.
and manage your expenses through the credit card. So I've used, I think maybe in my whole life, I did about 5, 6 credit cards. At the maximum, I've had 3 credit cards at one time. But thanks to God, I've never paid a single cent interest on any credit card.
Good. That's
I
it.
had set up my account as 100% debit. So as soon as the statement account comes on the due date, it will debit my account. So I had no choice.
Right.
So I forced myself to ensure that either I had the money in the bank when I spent it, or my salary that comes will cover that bill when it gets due. So this way I enjoy the credit
Yeah.
benefit of that 30 or 45 days from the time I purchased the goods. But also at the same time, I did not end up going beyond my capability of earning money. I kept it within that earning
Right.
capability. So it was a much more constructive way of using a credit card. So I also advise a lot of people like this that you can use a credit card to your advantage, but keep these in mind. What people tend to do is they start using the credit to finance another credit. People have taken one credit card to pay another credit card. That is the most carnal sin you can ever do. Because not only you are paying a card with another card, you are paying a very high interest on the money you have lent, because cash on a credit card is the highest interest I think that you can possibly pay in the banking
Yeah.
system, as far
That's
as I
right.
know, right?
That's right. That's right. Right. Right.
So anyway,
So
I went off the
I
top
remember
track.
one is, yeah, no, this is exactly the correct step which you have said and which you have followed. Everyone should follow this kind of steps, because that will keep a check on yourself, so that we know where we are going overboard and we can just come back again to maintain that balance. I can remember one incident, like multiple credit cards, and like you said, so one of my client, 1 year back, he was having 7 credit cards, and what he used to do, he had just taken that credit card only to cover the loan, the outstanding dues to be paid by the other credit card. So the first credit card would have an outstanding due. So what he used to take, he used to take second credit card, he used to take a loan, pay that money, and now this is gone. Now second credit card. So second credit card have an outstanding
Another
due. He
credit
will
card.
take the another. So that that way is still done till the seventh credit card. But afterwards, the credit card companies stopped him because they said that your credit score has gone to that level where you can't do anything,
True, true.
and that's very this thing.
Fine.
So
So
another, yeah, tell
please,
me.
please, yeah, go ahead. No, I just want to say, so next point, what is the next instrument you think we can use that can really make our money work for us?
Yeah. So another is a very popular and very attractive instrument is mutual fund. So who want a share of tremendous return on the Indian equity market, but do not have the expertise to invest it? This is the financial vehicle you can think of. This is the financial instrument you can think of. Right now, today, if you say yesterday Sensex has gone to 50,000. Now everybody will not have that knowledge or share to invest directly into stock market. So this is the instrument which they can use. Now, what the advantages are there? What mutual fund does? So using the investors' money, they create a portfolio in which the individual investments have different responses to the same set of events in the equity market. So when the value of a few investments falls, a few other will rise. So that's ensuring the value of the portfolio will doesn't fall by much. Now, every proof and research have shown that portfolio will show steady returns over the time. Now, here your patience will really test. If you have a patience, if you have a financial goal for over 5 years, 10 years, or 15 years, then mutual funds is the best financial instrument you can ever think about. That will give you a compounding interest, and it will always make your money work when you sleep. Because they are mutual funds which invest in Nasdaq 500. which invest in US stocks, which is invest in Brazil stocks, China stocks. So their timings you can see when we sleep, US market starts. That's where your mutual funds will work and give you the returns. So this is exactly where you can make money while sleep. But if you do the right processes with respect to your goals, and like I said, every mutual fund will not give you the returns. You need to check with your financial advisor, financial trainer, financial mentor, check whether it is alignment with your goal. And if you're not going off the track, if you're going off the track, then again come to the track, change your mutual funds and get you to the right thing where you can achieve your financial.
I actually have to agree with you on the mutual fund concept, Mahesh. My point was when I was at a different stage in my career where I was working, I never had time to actively go into the share market and look at it. So I made sure that I took advice from other portfolio managers and selected some select mutual funds. Okay, I'm talking about 10, 15 years back. So my goal to them was that I want to put it somewhere that it will earn an interest higher than what is in the bank. That time we were getting
Right.
8.5% interest on a fixed deposit. So I told them
Right.
I want to make sure that I get more than 8.5%. Even 8.6 is fine, but I just want to get something more than my fixed deposit. So I am not looking for 20%. Like if you, some of the guys were promising 20% return and 22% return, I said I don't believe in that sort of overestimation of the market. Yes, if you hold your stocks long enough, they will give you returns about that amount, right? But the point remains is that
Right.
how much is it per annum? If you calculate, it will not be that great, honestly speaking. So I
Right.
told them, just have reasonable. I want per annum at least 0.1% more than my FD. That's all. Not more, not less. So I invested in
Mm.
certain mutual funds that they suggested at the time. And I kept monitoring it. I had to go on like once in 2 months, once in 3 months, just to see how my portfolio was functioning. And on an average, I earned 15% return on them over a period of 5 to 6 years, and not the first year and second year. It takes time for those portfolios to function. Okay, and the good thing is that when the market was at its peak, I sold it. I sold those mutual
Oh.
funds and came out. Thanks to again to my friend who advised me to step out of the mutual fund.
Mm.
So we capitalized on one boom in the market and made a pretty decent packet of money, and then reinvested it when the market fell again. This market is cyclic,
Right.
as you know, right? So when the market was up, we
Right.
did it. And when the market fell down again, I reinvested the money back. So, as you rightly said, there is a way to invest in mutual funds also. And
Right.
I would always suggest go to a portfolio manager, even in mutual funds also. You need to pick the right mutual fund. I mean, like I invested in
Right.
Franklin Templeton and lot of decent amount of money also lost. So even mutual funds are having same market.
Subject to market risk.
So you
Yeah.
have to take that also into mind that at that time Franklin was a very good investment. And when I was researching it also with my friend, it was that Franklin was a very good investment. And some of their funds are even now performing well. Okay, so
Right.
it's all about the risk versus return and how well you can foresee what's coming. Anyway, sorry, I went off
Right.
track. I just want to say, tell people that
Yeah.
they should be taking precautions even in mutual funds also. That was my point.
Yeah. That's right. That's right. So another instrument which we can think of, like for the senior citizens or the people who are like 50 to 55, they want some less risk kind of thing, because like Grenville rightly said, mutual funds are subject to market risk. So you don't want any risk kind of thing, and you want some government involvement. Then this is a very beautiful financial instrument. I am sure our grandfathers, our fathers, everyone must have used that. It is called Public Provident Fund (PPF).
Oh, yes.
It's a Government of India debt fund. It is a very good instrument, but it is a illiquid instrument. Why? Because you have to wait till 15 years, but you can deposit any amount from 500 to 70,000 annually and withdraw the principal. But like I said, not before 15 years. You have to wait till 15 years and then you can withdraw by part. They have just some certain calculations. So you can withdraw only 1 year so much amount. Then afterwards you have to wait till 1 year again. You have to withdraw some amount. There is no default risk because all guaranteed by government, so you don't worry about that. And the money
I,
investment
I just sorry,
in PPF, yeah,
sorry. I just want to ask a question on PPF. So can we actually invest
yeah,
even
yeah.
before we start working in a PPF account, or only if you're employed you can have a PPF account?
No, we can do while we don't work also. As an entrepreneur, we can start a PPF account. We can directly go to SBI branch. I would suggest SBI, Government of India's bank, because that bank will always support for everything. And you can open a simple PPF account. Even though if you don't have a SBI branch in your locality, you can go for private banks as well. Right now, government also given access to private banks also to open PPF account.
No, but what
And
about a
same
student?
facilities,
Can a student invest in PPF?
yeah, they can do. But the
Really?
problem is that, yeah, but the problem is that before 18, they should not create an account in their name. Either they can be nominee or they can be joint holder with father or mother. Why I'm saying is that because if they are not turned 18, there is a consideration minor. And after minor to major, no, it takes a lot of process. So the complications of the tax deductions every will come into force. So the person that child, if he starts to working at the age of 19 and 20, and when it start to file the IT returns, so this IT returns also have to show. So a lot of complications are there. So it's better that till the age of 18 you can put him in a nominee, or you can put a joint holder, and a joint holder you can't do because he's a minor.
I
But
know. Yeah.
once he reaches the age of 18, you can directly create an account.
But are the PPF returns taxable? I don't think so, right?
Yeah, it is taxable, but if it is ATC, if you're considering 1.5 lakhs, it is there. So till 1.5 lakhs, you can claim the deductions. But post that, it will be taxable.
No, but with the current new taxation structure of 5 lakh limit, so this will be calculated as taxable income, right?
Yeah,
So
that will be calculated
it would
taxable.
be the interest, not the maturity amount.
Maturity amount, no, the interest amount.
Interest part. Okay. Sorry, just for my knowledge, because it's been a long time since I did my PPF account. That's the reason I'm asking.
Yeah,
Okay. So
yeah,
if the children are about
that's the one
18
thing.
years old, even if they're a student, they can open a PPF account. They don't need to be employed for a PPF account.
Yeah, only thing they have to ensure that they have to keep their parents as the nominee and the rights to operate the account in case if anything happens, in case they can't deposit their money and everything, so that they can operate the account on their behalf also. Otherwise, if it is a single-handed account, then it's very difficult for one to manage. Then a lot of complications are there because since it's a government-related account, and then a lot of processes are there, so they have to follow that.
Okay, fair enough. Sorry, I went off track.
Yep.
Just suddenly eagerness to learn something, I went off track. So yes, again, just to
Yeah,
tell you
no, no
about my
worries.
experience with PPF, I've had the same experience. I invested PPF initially to save taxes. That was the first reason I started putting into PPF. But over a period of time, I realized I think the best return I got ever in any of my investments was on the PPF account. But that was way
Right.
late in my life that I realized that PPF actually is one of the better investments to put your money in rather than in the other places. You'd rather pay your full taxation in other places rather than trying to put them and put investments. And as you said, they're almost risk free.
I would say that whenever our child gets age of 17 or 18, as soon as he turns 18, he or she, they can start a PPF account. We can open a PPF account in their name. And till the age of like 15 years, if we can say 33, so that age is getting married, he or she is getting married. That's a perfect corpus we can create for him without any risk. Yeah, although the interest is a little bit varying, but right now the government of India have done a very good job. They have kept a variable rate of interest, so that's very good opportunity for us. So saying coming from that perspective, we can create a lot of corpus from that perspective. If you don't want so much risk, if you don't want a lot of private involvement, if you don't want any market risk coming into that, then we can go for this debt life instrument. This very good instrument.
Yeah.
But yes, if we start very early, like any financial instrument, we can start very early, because as soon as at any age, at any point of time, you need to start early so that you can reap the benefits of that particular financial instrument. Otherwise, the time lag will be a major obstacle for you in achieving any financial goal and in achieving any goal of your life.
That makes sense. But again, the one thing I think which we should tell the audience is that whatever be the interest rate on the PPF account, it is still always going to be much higher than the FD interest rate, right?
Yeah,
That is something
that's
that
right.
people need
That's
to
right.
know. That if you are going to keep your money liquid, and again, the only issue is going to be the lock-in period, as you said, right?
Oh, right,
So
right.
if you are talking about long-term investment, and rather you want to put an FD for 10 months, 10 years, you rather not do that. You rather put it into a PPF account, which would give you a much better interest and a much better return over a period of time. And I think you can take
Right.
loans against your PPF amount also, right? That facility
Yeah,
is
yeah.
also
So
there.
Yeah, so after 7 to 8 years, I think we can take the loans against the PPF also. That is again a good thing
That
we can
benefit is
take.
also there.
But I would, yeah, but I would suggest don't take any loans against your financial investments or instruments, because that is particularly only for achieving your financial goal or for creating corpus for you for retirement or for your children's marriage or higher education. So don't ever take loan against your investments. I would suggest we can take loans like home loan, personal loan we can take, or loan against property we can take. But for this, like loan again, nowadays banks are started against loans against mutual funds also.
Mm.
So they are giving some opportunities because right now they have lot many liquidities are there. They want to give loan. So again, loans against securities, loans against mutual funds. These are very dangerous kind of loans because you are just trading your investments with your loan, and that's very dangerous perspective. So keep it aside, keep it separate, and keep it simple. Don't overcomplicate your financial life. It's very easy. It is very easy to understand. It's very simple. But we as general, as an people, we always, as a person, we tend to complicate the things rather than making it simple.
I stand corrected. I should have not have said that. I was just trying to make people understand that your money is really not locked in for 15 years. So if you really are
Right.
in a fix and you want to get money out, you could take a loan against your FPPF. But you're right. I totally agree with you. I don't think financing your savings is the right way to go. I totally agree with you. I
Yeah.
think a saving is a saving. If you want to take a loan, it should be taken on its merits of a loan. I totally agree with that. I think that
Right.
I'm
Right.
passing a wrong message by saying take a loan if PPF. I realized after you told
No.
that
No.
point. I stand corrected.
No.
You're right.
No.
I didn't mention that.
No. You are right, because some of the people, I know a businessman from Mumbai. What he has done, that he was really heavily in debt, and he was thinking of some business expansion or some kind of new things. He came into mind, and now he has got to know that he is nothing. The market will not give him any loan based on his business perspective. What he has done, that he has a PPF of around 1.2 CR. He has kept a lot of money in that particular PPF. He suddenly got hold of that PPF and withdrawn each and every amount and invested in business, which again gone for loss.
Wow.
Now, at that point of time, he was not having anything for his family, and his daughter was around 19 years. Her marriage was to be decided in 20 or 21, but he again took a loan. So again, it got into debt.
Wow.
So
Wow.
this is the bad perspective of this. That is why I always say that don't. I suggested him. I told him that don't go for that. But then he was not having, I mean, options. He said that he could not mortgage his property because he already mortgaged his property. He doesn't have any liquid cash in his hand. He nothing have to pay. So ultimately, he got hold of PPF and got everything. That's a
I
very
agree with you.
sad
I
story.
think that is the worst case scenario that you just said. I think that is
Yeah.
something you should never ever do. So,
Right.
Mahesh, I didn't realize 30 minutes just flew when I talked to you. So, we're almost come to the end of it. One of our audience, Krishna Swami Naidu, has made a comment. So, I just read it out so you can also comment on that. He was talking
Yeah.
about the credit card. So, he said, same way I've used my credit card, how Grenville explained. Sometimes the banks in UAE were offering cash with very low interest, like 2% of the total cash received, with a payback period of 6 months in equal installments. So I've used that as a facility because the interest rate was very low. So to that extent, I think that made a lot of sense, right?
Yeah, yeah. So that's what I'm saying. Any financial instrument, we can't say it is good or bad. Each has own its advantages, is at own is a disadvantage. How we perceive, how we think that particular instrument, how we can take that particular instrument to our benefits, is what we need to realize it. Because for you it may be easy, for someone may not be easy because you are well versed with financial world. But for people who are coming from directly no knowledge and directly getting an access to credit card, so
Yeah,
much liquidity is there, so
true.
that will create a lot of problem in there. So it's all about thinking and taking the wise decisions. So it's better that if you don't know anything about that particular instrument, in case if you're getting off good interest of the particular lender, it's better that take an advice of an expert, financial advisor or financial trainer, so that they can better guide you against it, and then you can both take a decision what.
I agree. I mean, as you said, again, Krishna, kudos. I think you utilized that instrument very well and in very limited risk
Yeah.
and exposure. So kudos to you and your what you said. But as you said, Mahesh, I think
Right.
the point is about the merit of each case when it goes on a case to case. So there is no hard and fast rule to any instrument, right? Every instrument
Right,
can be
right, right.
used well. It can be used as bad as it is used as well. So it's all
That's
about
right.
how you apply the instrument to give you the returns that you get. So I would always
Right, right.
suggest reach out to a financial advisor like Mahesh, who could tell you the merits and the demerits. Still, the decision is with you what you want to do. But
Right.
taking advice of an expert who's been in this and this is his expertise of giving you advice would always give you the edge on when you start doing any sort of financial venture. This is my
Right.
honest suggestion. So Mahesh, thank you
Oh,
Mahesh for spending. Yeah, you want to
yeah.
say? Please go ahead.
One more thing I want to know, because I want to say we all talked about all the investments and everything, but we didn't talk about mitigating the risk. And the last but not the least, insurance. So this is very important, because I can't resist from saying this thing, because everywhere we're talking about profits and everything, but risk is very important, because be it your life insurance, health insurance, car insurance, any other insurance, the primary purpose of these instruments is only risk mitigation. Not only it ensures financing for a family which has lost its main earning member, but also it acts as a long-term investment for meeting financial goals like children's education, marriage, buying home, planning a retirement, anything what which it also offers a benefits of protection against the critical diseases and hospitalization expenses also. Like we are seeing in pandemic, health insurance has came in a long way. It has become a very good use. People are now realizing the importance of health insurance. So although you have everything in mutual funds, savings account, you have ppf, you have stocks, you have real estate, gold and everything, but if you don't have insurance, then this all will never serve your purpose irrespective of any financial work, because you are the earning member. If you are not there in this world, who are the people who will going to fund this all these things, and who are one who will be taking care of a family, who will be taking care of the same kind of lifestyle you want? So the insurance will come into play. So irrespective of anything, go for first insurance and then you go for this particular instruments, so that you can just segregate and plan your financial life in a much better and easy manner.
I
That's
totally
one
agree,
thing.
Mahesh. I think we miss this valuable part of life that you insurance plays, that we don't see the benefit because we look at it as an investment.
Investment,
I
right?
think that's what we need to change our mindset. We'll do a separate section on this, Mike. I really want you
Sure.
to tell us the importance of insuring yourself. I think people are missing this very valuable lesson. So we'll do it maybe next week or the week after on what is the value of doing insurance against investment. What is the risk coverage versus the investment, which is important to people. Okay. So thank you
Sure.
everybody who came on live first. Thank you, Mahesh, for sparing your valuable time and sharing these valuable inputs from you. I learned a lot today, and I'm sure the people who listened as well, and those who are going to see the video also will really take away a lot from this video. So thank you so much for your inputs.
Thank you so much, Grenville, for again inviting me. Thank you so much, Krishnan, for asking that and sharing your valuable experience, because this all really means a lot, because coming your experience is really will be touching some other people's life, because they might be in some other bad financial situation and they might need some motivations. It's like you people who are coming forward and sharing your experiences will eventually change their financial life. So, thank you so much.
So thanks, Mahesh, and thanks everybody who watched this FB Live as well as those who are going to watch the recording of this video. If you like this video, it will be posted on my YouTube channel. Like and share it with other people so we can spread this knowledge that we are putting in these sessions, both of us, as well as try and also like and subscribe to the channel if you want more content. There are other matters we discuss as well beside financial management, but this is what we do every Friday on FB Live. So thank you for joining us. Take care and stay well till next week.